AMC is climbing again, and not just inching forward, but potentially setting up for a historic breakout. You may think the 2021 squeeze was a once-in-a-lifetime event, but signs are emerging that something even bigger could be forming right now. In this video, we're diving deep into why AMC might be heading back to all-time highs, how dark pool data proves manipulation is crumbling, and why the first short to exit might be the only one left standing when this next wave hits. Let's break down what's happening and why the squeeze might be a lot closer than most people think. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But everyone, remember, this is not a financial advice video. We're witnessing another dramatic chapter unfold in the AMC story, and there are some undeniable signs that the short sellers are beginning to lose their grip. A recent tweet from Reese Politics highlights an important clue. AMC surged 8% while a massive 62% of its trading occurred off exchange. That's a huge signal. Why? Because dark pool activity has long been a tool used to suppress stock prices by hiding buy orders away from public exchanges. Historically, whenever AMC moves up 9, 11%, even 23%, we've seen a pattern emerge. These price movements are always accompanied by unusually high dark pool usage. That's no coincidence. It reveals that the price is being suppressed and manipulated, with large buy orders routed off exchange while large sell orders are pushed into the open market. This imbalance artificially drags down the price, yet AMC still manages to climb. That fact alone speaks volumes. Think about it. Despite efforts to push the price down with heavy sell-side pressure, the stock still manages to post gains. That means demand is overwhelming even the most aggressive attempts to control it. In previous breakdowns of volume patterns, we've observed how the biggest buy orders don't even show up on public exchanges, where prices are supposed to be determined. Instead, they're hidden, stolen, and removed from the price discovery process. Still, the price goes up. That tells us something is changing. It shows how the short sellers are beginning to lose control, and they're being forced to rely on increasingly desperate measures, like flooding dark pools with activity, to delay what's becoming inevitable. Joshua Skye recently shared a powerful reminder. There are no friends when liquidation and bankruptcy come knocking. The first hedge fund to bail out of AMC or GME might actually be the only one to survive, and they know it. Once the squeeze begins, the mad rush to cover shorts will be like a stampede through a single exit door. Only the earliest movers will have a chance at minimizing damage. The rest? Burned. This is the dynamic we've always known would come into play. The short squeeze isn't just a theory. It's a chain reaction. When one fund starts covering, it spikes the price. That spike forces other funds to cover. Panic spreads, and soon there's a frenzied demand for limited shares. And here's the key part. Retail investors are holding. They're not selling. That gives them the power to name their price. It could start with a market crash triggering collateral issues, or it could start when a few short sellers decide to cut their losses early. Either way, it only takes a spark. Right now, AMC in the $6 to $9 range is already uncomfortable for short sellers. Imagine the pressure when it pushes to $30, $60, levels that don't even reflect the squeeze, just pre-squeeze momentum. The pain threshold is closing in fast, and when it breaks, we'll see those early exits. And remember, whoever closes first might avoid the worst of the collapse. That's why watching for these early signs is so critical. So why all the continued suppression? Why are hedge funds and institutions still fighting so hard against a $3 stock? The answer lies in another recent tweet from biotech Moose that references an interview with the founder of Interactive Brokers. According to him, if a true short squeeze takes place, AMC could go to infinity. That's not a meme, it's reality. The squeeze potential of AMC is unlimited because the number of shorts outweighs the available float, and many of those shares are tightly held by retail investors. If no one's willing to sell at $1,000, the next buyer might have to pay $10,000. If no one sells at $10,000, it might take $100,000. That's how dramatic things could get when shorts are forced to buy back shares from people who aren't parting with them cheaply. Everyone from brokers to funds to institutions understands this possibility. That's why we see the relentless manipulation and effort to contain AMC's price. But even with those tactics, it still goes up. That's a crack in the wall. And as more pressure builds, those cracks will widen. Let's also talk about another interesting indicator, the AMC options chain. According to Antonio Costa, we're seeing heavy volume on $4 strike call options with over 32,000 contracts. That's significant. AMC is already hovering around 354 cents, meaning these options are within reach. But more importantly, this spike in call option activity shows where the sentiment is heading. Up. Retail isn't the only one betting on AMC. Institutions are also positioning themselves for upward momentum. We've seen them reducing puts, buying calls, and going long on AMC. If they didn't see the upside, they wouldn't be shifting strategies, but clearly something has caught their attention. Whether it's the accumulation we're seeing, the options activity, or the institutional inflow, the message is clear. AMC's long-term prospects are being taken seriously. Another potential trigger for this inflow is an ETF that reportedly has 1 billion shares shorted over the past 2 days, and it's facing a forced close on July 29th. If that happens, it could have a dramatic impact on AMC, given how interwoven ETFs can be with individual stock movements. This isn't a guaranteed squeeze event, but it's a compelling reason why more money could be flowing into AMC right now. All of this paints a picture of rising momentum. Whether it's dark pool suppression failing, short sellers holding on to increasingly risky positions, or institutions placing bullish bets, there's a convergence of factors forming. Retail investors are holding strong. More shares are being bought and locked away, and the pressure is building beneath the surface. To round things off, consider what Stefan Vikstrom pointed out. Jim Cramer, who 3 months ago warned viewers not to touch AMC, now sees it 27% higher. This isn't about dunking on analysts, but it shows how mainstream voices often push narratives that don't match the reality retail is experiencing. Media headlines and talking heads might tell you to sell, but the price action and institutional interest says otherwise. What does this mean for you? It means staying alert, doing your own research, and understanding the full picture. The signs are pointing towards something big. Shorts are losing control, retail is holding firm, institutional capital is showing up, and the stage is slowly being set for what could be another massive AMC breakout, potentially bigger than anything we've seen before. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.